I've had the privilege of working alongside Shawn King, for the past few years inside the Cash Compound, and in that time, I've come to appreciate something rare. He doesn't just study financial concepts, he submits his life to them. He tests ideas in real time. He stress tests principles against raising kids, real world demands, and shifting priorities. And when something doesn't hold up in real life, he doesn't defend it, he discards it. That was written by me. But the rest of this book, From Regular to Rich, was written by Shawn King. I had the privilege of writing the foreword, and now I've had the privilege of talking to him in front of you about this new piece, From Regular to Rich, how one decision can transform your financial life forever. Here comes the Banking Bros Podcast.
So I found this headline while staying on top of my own personal finance. It was an article from Investopedia, and it was titled, "Your Will Doesn't Control Who Gets Most of Your Money. This Does." And the article highlights a surprisingly common estate planning mistake. Most people assume their will determines where all their money goes. But in reality, a large portion of someone's assets never pass through a will at all. Instead, the determining factor for many financial accounts is something called a beneficiary designation. And these are forms that are attached to accounts like 401ks, IRAs, and your life insurance policies, and certain brokerage accounts that specify exactly who receives the money when the account owner dies. So here's the key detail. Beneficiary designations override whatever's written in your will. This means that even if your will says all the money should pass to my spouse, but you left an ex-spouse as the beneficiary on your life insurance, the beneficiary standing comes first. The financial institution is legally required to follow the beneficiary listed on the account itself. And this becomes a serious problem when those forms are outdated, right? For example, if someone named a former spouse as their beneficiary years ago and never updated the account, the ex-spouse could legally receive the funds, even if the will says the money should go to the current spouse or the kids. And the article also points out another category of assets that bypass wills entirely: accounts with transfer on death or payable on death designations, as well as joint accounts with rights of survivorship. In these cases, ownership transfers automatically to the named person when the owner passes away, the original owner. Because of that, estate attorneys often stress when they're reviewing beneficiary forms that you should do that regularly. And it's just as important actually as updating your will. Major life events, marriage, divorce, births, deaths in the family should trigger a review to make sure those designations still reflect your intentions. The broader takeaway here is that in estate planning, it's not just about writing a will. It's about making sure that all the legal structures attached to your assets actually align. From our perspective, this is also where financial structure really starts to matter. The vehicles you use to store and transfer your wealth, whether that's retirement accounts, life insurance, or other financial assets, they carry all their own rules around control and taxes and legacy planning. And if those pieces are not coordinated, even a well-written will might not produce the outcome that you intended. So pay attention. And with that, let's jump back to the studio.
We've got him a new author on the podcast here, and Shawn King is coming to us from the Gulf of Mexico, America side of Florida. However it is, I don't know. I'm not politically correct here. We do things traditionally with money that are not typical anymore. And this guy talks about how he was a typical guy. He was regular, but he was on his path to riches. And so Shawn King, the author of the book, From Regular to Rich, How One Decision Can Transform Your Financial Life Forever, and a cash compound coach around here. Shawn, thanks for being around, man.
Yeah, thanks for having me, man. I'm excited to chat and just kind of share a little bit about the book. And again, hopefully, like we were talking about before, the whole goal is to start conversations that lead to helping people better control their financial situation. So
yeah, man. So for you, I want to go back to, why did it start? Where did it start, and why did it start for you? Nelson Nash, the founder of this infinite banking concept, and said, hold on, time out. We have an interest problem. Banks, the Fed, I have a problem with that, but whole life insurance solves that problem. He said, it all starts with how you think. It's all about how you think. It's all about how you think. So where did your thinking change? Why did your thinking change? Because you were regular. I was regular. When did it all begin for you?
Yeah, so of course I talk a little bit about my story in the book. The whole thought process was I was working, I got my college degree, went and did the whole thing, graduated, had the piece of paper, didn't really do anything for me. There wasn't anybody there knocking down my door to offer me a high paying job now that I had this degree, this coded thing. But I was just working normal jobs, man, just bartending, driving FedEx trucks, doing all these different things and kind of living paycheck to paycheck. And I was quickly realizing that, hey, the people around me, my parents, a bunch of other people were also still kind of doing the same things. So I decided after some serious inter- interpersonal thought, like, I need to start doing something different. We had joined a travel club right out of college. I got to do a lot more traveling. And I realized, like, hey, if I want to do this type of thing, I need to start focusing on building a life that's going to allow me to do these things. So I picked up some books, of course. First one, Rich Dad, Poor Dad by Robert Kiyosaki. That kind of opened my mind to, hey, normal people and rich people don't think the same. Like, they don't do really anything the same with their money, with their habits, with their businesses, all of these different things. So I started looking closer at what wealthy people were doing. And I just started to realize when I first started, it wasn't insurance. Like I wasn't getting to that level of like, oh, they all have whole life insurance. Like they're using other people's money through leveraging, these guaranteed products. But as my life kind of progressed and I happened to land in the seat of being a life insurance broker, which was just happen chance, it it started to uncover these things. I'm like, wow, this is a way that normal people can take back more control of the money that they're making on a daily, weekly, monthly, yearly basis, keep more of it and keep it growing for them. Like, again, there's so many things that you can do once you have money to leverage and create more wealth. I think we can both agree when you got 50, 100, 500 bucks, it's really hard to turn that money into more money. But when you have 50, 100, $500,000, it's a lot easier to start making money. So my first step was, hey, how do I create some capital? How do I build some cash that I can start to leverage? Which took a little time, took a little discipline, but now it's put me in a position where once you got a little money to use, more money starts to show up. It's kind of crazy how it works.
Now, the dedication in this book is to your immediate family. We know you're on the verge of kid number 2, but you have a beautiful wife who also works alongside you in your businesses and your mindset around money and travel and things like that. You guys are very close, but it's not just your immediate family. Your immediate family is actually a family you were born into. I would call them immediate because they're immediately right there in your house, right? Your mom and dad, your sister's close by as well. But I want to know about if they did not instill some of these financial freedom, wealth building mindsets into you, were you the first person in your immediate family to catch on to these ideas? You're dating this girl, you marry this girl, your parents are around, you're obviously friends and close with them, they live with you now. But were you kind of ground zero? Were you the catalyst? And then how did they respond to it? Shawn, I work with a lot of people at the Cash Compound who are the catalysts in their family, but the other people don't really get it, don't catch on. Maybe it's uncomfortable for them to have conversations with their other family members because they're changing some system or some thought patterns they've had for a long time. So how did that shift for your family? Or heck, no, it was fine. They all bought in, or I wasn't the first person. It was actually my sister who learned it first.
Yeah, so my sister is successful. She went through, got her master's, all this stuff. She has a great job. She's a registered nurse. So she's, had a good job for quite some time, but never been like a money focused person as far as understanding it more in depth than she does from the paychecks that she gets from her job. As far as my parents go, again, I talk about in the book, fantastic parents, some of the best in the world, bar none. And they're still together, which is crazy these days. But they only taught me what they could teach me. So I was always out there just trying to learn more. I wasn't ever that big on reading, but once I picked up that first book and I found things that really interested me, like understanding, financial nuances and whatnot, I started to dig more into that. So I was really the first person in my family to start bringing these things up. Uh, my mom always kind of had a entrepreneurial type bone in her. She had cleaning businesses, pet sitting businesses, like pretty large ones. So she had a bit of flexibility in her career out after, 2008, and a lot of that flexibility that she maybe had in her previous job was lost. But really, once I started doing the travel club stuff, and it just kind of made me rethink my thinking, get more into personal development, more into these things that I felt like I can control. Um, I've never done a lot of sales or anything in my life, so I wasn't the type of person that was constantly pitching new things to my family. But the first thing I did was the travel thing, and I was like, "Hey, you guys got to come on these trips with me. You guys got to do this stuff. Like, this was great." So they got that experience. They saw me making money with that, and they're like, "Oh, this is great." And then when I transferred into the life insurance sector of things and started presenting them with these things that I thought would be beneficial to the family, they were open to it. Now, like when you deal with most family, most people know you for what they know you for, which was always a hard barrier to overcome when you start talking about finance. We start talking about money. I'm the youngest in the family, so talking to my parents, my sister, other people in our family about money is just like, I know Shawn when he was still in diapers. I know this, that, and the other thing. It's hard to believe that this person could instill some valuable financial knowledge in them. But again, my parents trust me. They see me reading all the time. They see how hard I work at everything I've done in my life. And so it wasn't like a right away thing where they hopped on board with getting policies or starting to learn from me, but they were very open to learning, to having conversations, to me educating them. And then at some point, it just kind of like, hey, I've been doing this for a little while now. You guys have seen me pay off some debt with this. We've talked about it. I think it's time that you implement this in your lives. Same thing with my sister. We have a great relationship. I got her policies early on, IUL style policies, when that was the first thing that I was doing. And then as I kind of transitioned into this, started educating her about the new stuff and like, hey, we need to switch some stuff up. I've continued to learn. We can move this over to this. And again, they were just very open to the conversations, which I think is the hardest part for most people, especially when talking to family. Again, is like, hey, are they even open to hearing what you have to say? And luckily, my parents and my sister were very open. And so now they have policies. My sister's kids has policies. My mom doesn't qualify, but my dad has a policy. We talk about these things. My sister just took a loan from her policy recently to do some stuff, but it's all about that conversation. And I was always the one just willing to push and say, hey, we need to have these talks because this stuff is extremely important.
Now, why would you say, in your own words, obviously we're preaching to the choir, but our audience out there really wants to know why and how is whole life such a foundational tool? Whole life insurance. Why is that the thing that we're always talking about? Maybe they're hearing us for the first time in this conversation and they just subscribed. But what is it about whole life insurance that's different? Why do we say riches and wealth when we're talking about insurance? I mean, isn't that just supposed to be for funerals?
Yeah, so for most people, they think like, hey, I don't get to, this is great. Life insurance is great. And I was on that side of life insurance before where it was really focused on the life insurance aspect. And it's just like, hey, wouldn't it be great if when I passed, I could leave something more to my family than I would have otherwise left them if I was just doing my normal 9 to 5 day-to-day thing? Yes, that would be awesome. If I could trade a small amount of dollars for a larger amount of dollars tax-free, great. So I was always a big believer in life insurance in general. And then I started to learn about the right types of life insurance. And I just realized like, man, again, whole life isn't going to make you personally, you rich. It's not going to make you the wealthiest person in the world. It's not going to make you Jeff Bezos. It's not going to, that's not going to happen. But what it is going to do is it's going to give you this foundation that you can build so many other things off of. And once you start utilizing more and more money in your life, you will realize that the preservation of capital is the most important thing when it comes to building wealth. I have lost money in my life doing a lot of different things, The money I cherish most is the money that I hold on to. And even if it's growing at a lower, some may say nominal rate, like it's so important to have that access to that capital and keep it close to you so I can leverage it and do different things with it. But to be honest, man, I wish it wasn't whole life insurance that we had to talk to people about, because it has such a bad name around it.
Yeah.
As soon as you bring it up, people are just like, "Oh, no, I have heard Susie Orman, I have heard Dave Ramsey talk about this. It's the worst investment in the world. It's all of these things." But every single time I have a conversation with somebody and I start to break down all the benefits that whole life insurance offers, especially when it's properly structured, they always ask the same question. Two questions, or they say a statement: "Man, I wish I would have known about this sooner." And the other one is, "How do more people not know about this?" So it's really just getting into the details and understanding it. I think there's this misconception around it for so long that it's this thing that it's really not. And they've done such a great job at building these walls between the client or the customer and the product. Because if you understood what type of value it could bring to your life, every single person would want to have it as a part of their portfolio, the foundational piece, the legacy piece, whatever it may be, the estate planning piece, however it fits. Once you understand the asset, you know this is something I need to have in my life because it makes everything better. Whether I'm totally in on the market and I'm doing these qualified plans, and I think it's going to go to the moon. We talked about this on one of our calls. What about sequence of returns risk? Where do you have that buffer when you have a down market? Where am I pulling cash from so I'm not getting this, kind of call it this double whammy effect when I'm pulling out, when I'm selling stock in a lost time? So it fits in so many different ways: the legacy protection, the accessibility, the liquidity, the protection from creditors, lawsuits, and liens, just like all of these things that it checks. And the best thing about it is it's not this only do this asset, it's this and asset, this flexible thing that I can build so much from. And it's just been so great to utilize in our life. And again, I'll wrap it up with this. I think it's just a misunderstanding. Most people's understanding of whole life is a misunderstanding or misrepresentation of other people's understanding of whole life. So make sure you know who you're listening to.
Now, you mentioned universal life insurance, and we don't talk about it enough because it is a confusing product. It's also confused with whole life all the time. So how do you differentiate the two for many people who are probably clicking through, watching our stuff, and don't realize that we have some extreme opinions about the differences in these products? How do you help them know what we're talking about?
For sure. So I think the easiest way to understand it is, one has guarantees. There's contractual certainty that something will happen based on what it says in the contract. The other is very similar in the way that it functions if you were just kind of look at a 30,000-foot overview, but there is no contractual guarantees. So whole life is built on a guaranteed chassis, meaning like, hey, this is what I pay. It never increases in cost. This is what the contract says I pay for the rest of my life, or the term that I am paying. So great. We know that there's consistency there. We know that this is what it is. I can put more in, I could put less in, but we know the baseline. I know I'm going to get guaranteed growth. I know there's a potential for dividends, so on and so forth. With IUL, what really scared me was the chassis was built on a annual renewing term. And so, sure, what looks great early on was, hey, the cost of insurance is really low. This is only going to cost me a few dollars here and there. Like, by the time we get to retirement, I'm going to have a whole bunch of money. But that's if a bunch of other things fall into place. With your cost of insurance increasing every single year, it provides more risk. And so there's a ton of other things with IUL that end up injecting risk into the equation. But at the end of the day, I want my policy to be as certain at year 70 as it was at year 1. I don't want to have to rely on other things going right, especially those things being the market, for me to have success in a policy that's supposed to be guaranteed, that's supposed to be not an investment. It's this certainty factor. With IUL, again, I just realized, hey, there's a lot of levers that could be pulled and a lot of different things that could happen that could leave me with zero or money coming out of my pocket at the end of the day. And the last thing I'll say on it is, although both can be great products, I'm not going to knock one or the other. One has to be extremely well managed by an advisor or a coach that I'm hoping that you have built a relationship when you get the product, compared to another that you could literally just pay your premiums, even less than, into your whole life policy. And something pretty fantastic is going to happen later in life when you're ready to start accessing money, or you pass and you need the money to pass to your family tax free. Like, it's removing as much unnecessary, how do I want to say it, just risk as possible. I like risk, but I like it in my investments, not in my guaranteed products.
There you go. What does a rich life mean to you, Shawn? When we talk about this and see it in the book, what is it?
Yeah, so I touch on 5 things here in the book. It's rich in relationships. I'm talking about your marriage, your bond with your children, your friends, the people in your life. Building those type of relationships is extremely important to having a fulfilled life. Number 2 is rich in mindset. Man, the mind is such a powerful thing. And the older you get and the more that you learn about it, the more that you know thoughts become your reality. So being able to control the voices and all the things going on in your head is a great way to find real peace. Rich in experiences. Obviously, I'm the experienced guy. My family and I travel all over the world. Creating those type of memories have been the highlight of what we're able to look back on through our relationship and just reminisce about all the amazing things that we've done. So I promise you, you will want more of those at the end of your life, no matter what. Try and get as many of them now. Rich in contribution. How are you providing value to the people around you, the people in your community, to your family, to your friends, to the world as a whole? Like, how are you providing value? Because that's where we find the most success, when we're able to provide value to people. And the last thing, of course, and I think it falls into the 5th spot, is rich in finance. We're talking about time freedom, cash flow, all of the things that, money doesn't solve all your problems, but it can solve a lot of them. And it can free you up personally to fix the rest of them, because you don't have to worry about the biggest monkey in the room, which is normally, can I pay my bills to stay alive and take care of the ones that I love most? So again, I labeled it from regular to rich because, sure, my wife and I are not the wealthiest people in the world. I wouldn't even say we're wealthy by a rich person's standards yet. We have a lot of things in place that will help get us there, and we are moving in that direction very quickly. But my whole thought process behind living a rich life is checking off all 5 of those boxes: relationships, mindset, experiences, contributions, and then the last one is finance. And if you can focus on those first 4, I guarantee you the 5th one, you'll do all right.
My man, where do we find the book, From Regular to Rich by Shawn M. King?
Yeah, so the best way to find it, and again, shout out to Jeremiah, you guys. If you haven't grabbed yourself a copy of the book yet, he actually wrote the foreword to it. So definitely check it out. He did a great job on that. His first foreword, my first book. You couldn't tell either of it was our first.
Correct. I read it after it came out on my copy. I was like, man, I ain't bad. Yeah, right.
Yeah, so you can find it on the sales landing page from regulartorich.com. Of course, you can just grab it off of Amazon. You can find it on my normal website, legacylifeandretirement.com. But it's been out for a little over a month now, approaching 2 months. It's done really well. I've got some great feedback from it. And again, it's not all about infinite banking. It's a lot about building yourself up to the point where you feel like you're capable and able to start taking on this type of next phase of your financial journey. But then it also talks about, again, family, travel, getting a hold of your budget, handling debt, all of these little things, investing. Like it kind of lays out a game plan. I think it's a great precursor for becoming your own banker. So some of these things, Jeremiah and I both know, went over our head when we first read this, but I think I do a good job in the book, kind of breaking some things down, simplifying a few things, and prepping you to actually become your own banker. So go ahead, grab yourself a copy. Would love to know what your thoughts are on it.
All right, it's time for today's top 5. And today we're talking about something that affects your energy, your focus, and your stress levels. It affects your productivity, and honestly, it even affects your finances more than most people realize. And the thing we're talking about is your sleep. So this is the top 5 ways to actually track your sleeping habits so you can start improving your recovery, your performance, and your overall health. Coming in at number 5 is the old school method of a sleep journal. Now, I know that sounds simple, but it's pretty effective. You just write down what time you went to bed, when you woke up, how rested you felt, and things like caffeine or alcohol intake can really help you notice patterns really quickly. Sometimes awareness alone fixes the problem. Number 4, use your smartphone. Most phones now have built-in sleep tracking features like Apple Health or Google Fit. They can track sleep duration, bedtime consistency, wake-ups during the night, and even trends over time. It's easy because you already have the device with you every day. Number 3, wearable fitness trackers. So you've got things like Fitbit, Garmin, Apple Watch. There's rings now you can wear. They track just not how long you sleep, but also things like your heart rate, your movement, your recovery, your estimated sleep stages. What's powerful here is seeing how your body responds to stress, workouts, travel, or even late night eating. And number 2, creating a sleep environment scorecard. This one is super underrated. Start paying attention to the room temperature, light exposure, screen time before bed, consistency of your schedule. A lot of people think they have a sleep problem when really they don't. They have an environment problem. And finally, coming in at number 1 is tracking how you actually perform the next day. This is the real scorecard. How's your energy, your focus, your patience, your workouts, your productivity, your decision making? Because the goal isn't to sleep more, the goal is recovery and performance. And honestly, there's a pretty bigger lesson involved in this too. The people who improve fastest in any area of life are usually the people who measure what matters. Whether it's money, your health, your business, your habits, it doesn't matter. Tracking creates awareness, and awareness creates improvement. Anyway, that's today's top 5. Get some sleep tonight, though. Your future self will thank you for it.
When you know someone's why, everything really changes when they talk to you about what they do now. Their come from is so important. So on the next episode of the Banking Bros podcast, I'm going to have another conversation with Regina Wagner. She's in Houston, Texas normally, but she was in our studio, and we had a great conversation that we'd like to introduce you to help you understand where in the world the idea of sustainability financially and guaranteed income for life comes from for her, and what it's done when her family didn't possess it and when they did. So thanks again, Shawn King, for this great interview and this episode of the Banking Bros podcast. Thank you for letting me be a part of your story and your journey. Quite literally, we hope you guys really check out that book and stay tuned for the next episode that I'm about to get into with Regina, when she talks about how in the world her family went from regular to rich, just like Shawn King. Here we go.
You are now tuned to the Banking Bros. Said we couldn't make it, 3 cup setup, this the life we chose. Gave a lot of game, we never got a lot of things. Bow your head and say the prayer, we taught you how to be the bank.